Yeah, hello friends. Welcome back to channel again. So today we are going to look at what are all the possible ways we can invest in a Nifty 50s. Okay. So just before we start into just a small intro about the Nifty 50. Okay. So what the Nifty 50 is? It's like a combination of and multiple stocks. Okay. So multiple in the sense it's a 50 combination of stocks. Okay. So which will contain a diversified sectors, diversified stocks. Okay. So investing in Nifty 50 will give us a good returns over a period of time. Okay, with a decent returns, and also the invested money will contains a limited risk because it's a diversified sector. Okay, so sometimes if either one of the sector or stock is going to move down, the other sector might help us. So over a period of time, it will give us a decent returns in a long run. Okay, so if you look at the Nifty's price, right, so 18,972.10 as of today at 29th of June, and there is no underlying stocks available for Nifty 50. Okay, so we cannot directly buy the Nifty 50, and also it is trading at the level of 18,000 rupees, right? So if you want to invest in Nifty 50, so there are multiple ways. Okay, so we'll be going to look at that one after the other. Okay, so before that, okay, so let's look into the Nifty 50 stocks, list of stocks, whatever it contains. So for that, I'm just going into the NSE India website, and inside that, I'm going to the Nifty's 50. Okay, so if you look at, so this is the Nifty 50 stocks. Okay, so this has been like altered based on this today's price movement. Okay, so Adani Enterprise, Adani Ports, JSW, Infir Lines, all those are part of this Nifty 50 stocks. Okay, so if you look at, so how this Nifty 50 price is defined is based on these Nifty 50 stocks. Okay, and each stocks will contain the weightages. Okay, so based on those weightage, the price will be getting derived. Okay, and then at last the Nifty's movement will be decided by these 50 stocks. Okay, so if you decided to invest in Nifty 50, as I said, there is no underlying stock available for Nifty. So either we can buy all these 50 stocks. Okay, by investing as per the weightage of this Nifty 50, right? So based on that, we can invest a stock individually, and we have to do a lot many calculations on that. Okay, so just for an example, if you want to invest 10,000 rupees, for that 10,000 rupees, you have to calculate just for an example purpose. Let's say airlines contains a 10% weightage of Nifty. So then out of 10,000, 1,000 rupees will goes to Nifty, sorry, airlines, and let's assume that Titan is having a 5%, then the 500 rupees should be invested into Titan. Okay, so like that you have to calculate it for all the 50 stocks, and out of 10,000 you have to calculate that money. But here the problem is, if you look at, so if you want to invest only 10,000 rupees per month or 20,000 rupees per month, right? So if you look at Adani Enterprise itself is trading around 2,300, and Bajaj Auto is one particular shares price is around 4,630 rupees. And if you look at Bajaj Finance is having around 7,000 rupees, and if you look at the Nestle India, right? So it's trading around 22,600 rupees. Okay, 670 rupees. So if you want to invest only 10,000 rupees, then there is no possibility at all to invest in this way, right? Because one stock itself is trading around 22,670 rupees. So you cannot invest your 10,000 rupees or 20,000 rupees. Okay, so you need a huge amount if you want to invest in Nifty 50 using this method number one. Okay, so if that is not possible, then what will be the second option? Okay, so if you look at the second option, right, so there are lot many index funds available in the market. Okay, so if you go for just few among that is like Nifty ETFs you can invest, or Nippon, or SBI index funds, HDFC index funds. So these are few index funds available in the market. Okay, so by using that you can invest, and you can start with the minimum amount. Okay, so that will trade around 100 to 200 rupees in the range most of the time. Okay, so by using that you can invest into the index Nifty 50. Okay, so then even you can start with the 1,000 rupees. You don't want 10,000 even. Okay, so because it's kind of you're going to buy the few units of that index fund. Okay, so then it's a less risk index funds. Okay, so because its movement will be completely based on the Nifty 50. So Nifty 50 will be, in the long run, it will be going to move upside most of the time. Okay, so your investment in the index fund will be in the safer side. And then if you are still not convinced with the index fund, and if you want to do some other options, right? So then the option number 3 is you can buy or sell an Nifty futures. Okay, so for every 3 months there will be a contract available for Nifty futures. Okay, so you can buy if you are bullish on Nifty 50, then you can buy in futures, or if you are bearish on the Nifty 50, then you can sell the futures. Okay, so the issue here will be you have to adjust the MTMs. Okay, so this will be the option number 3. Okay, so but you have to be ready to keep on roll your position after every 3 months, or even if you are willing to enter into one monthly contracts, then you have to roll up or roll down your positions for once the Nifty future is getting expired. Okay, so then the option number 4 is you can invest in a, you can buy a call option or put option based on your market views. Okay, so if you are bullish, you can buy a call option. Okay, so here the very less amount of an investment is required because you are going to buy the call options. Okay, so if you look at, so Nifty is trading around 18970. So let's assume you are expecting Nifty to be in 20,000 in the next 3 months. Okay, so by the month of September, if you are expecting Nifty to be at the level of 20,000, so then you can buy a 20,000 call option of September. Okay, and if as per your expectation, if the market is going to move up above 20,000, then you are going to gain a profit, and if not, you are going to lose the premium you have paid. Okay, so you don't in the options there will be lot many strike prices available. Either you can buy at the 20,000 level, or even you can buy at the 18,900 or 19,000 level, or even you can buy the call option at the 18,000 level. Okay, so that will be an in the money, and you have to pay the entire premium for buying that 18,000. Okay, so that 18,000 September will be somewhere it will be available somewhere around 1,000 to 1,200 price ranges most of the time. Okay, so for 3 months the premium will be at that ranges. Okay, so by, if you are bullish, you can buy a call option, or if you are bearish, you can buy an put option. Okay, so these are all the basic 4 ways you can invest in the Nifty 50s. Okay, so either you can calculate each and every stock's weightage, and then you can allocate a fund to this each and every stocks by buying each and every stocks using the capital or amount you have. Else you can buy in futures, or you can buy an index funds, or you can go with an options. Okay, so these are all the multiple ways, but in the long run Nifty should go up because India is a developing country. Okay, so and if there is any stock which have any fraud related stuffs, right, so SEBI or NSE will take an action against that, and they will be those stocks will move out of this Nifty 50, and some other better performance company stocks will come inside the Nifty 50. Okay, so we don't want to worry much about this Nifty 50's index funds. Okay, and if you look at the Nifty's movement, right, so if you look at the 5 years movement, so here you can see it was around 10,772 at 6th July of 2018, and right now it is trading around 18,000. Okay, so it gave 76% in the past 5 years, and if you look at the max price, right, it gave around 2029% of returns. Okay, so it started at the price of 890.80 rupees at the time of 1st Jan of 1999, and from that till date it gave the returns of 2029%. Okay, so the Nifty will be, if you are a new beginner, or even if you want to diversify your investments for all those purposes, you can just simply enter into one Nifty's index fund. So that will be in better options because it is going to give you one good returns in the longer run, and also you don't want to worry much about the risk you are going to take here. Okay, so this is about the today's videos, and hope you guys are liking our videos, and just like our videos and share this with your friends as well. And if you are watching our videos for the first time, then just subscribe it and click on the bell icon as well, so that you will be getting the notification whenever we upload our new videos. Okay, and on a weekend basis we are taking an options trading webinars. Okay, so it will just cost you 1,000 rupees, and you will be going to learn lot many stuff which is not available in the internet. Okay, so thanks again for watching, friends, and happy trading.